All right, let's jump into it. Where we are, just before 11 o'clock. So 2 to 11 on the 14th of January. We got the Tuesday. So look, I'll start off with Aussie in that because you know what I mean. It's up off the mat. Well, marginally in that, but it did have a pretty good night overnight. And this is actually just starting on a weekly view, just because that's what I happen to have it ticked on. When I clicked onto these, because I don't really look through the charts prior to doing these analysis, so it's nice and fresh. But of course, yeah, watching the charts all through the night anyway. But we are sort of seeing, obviously, as I said, a little bit of a pip punch up off the lows. I mean, look, in respect of the whole move down, it's barely anything in that, so it's not really sort of a cause for sort of super sort of joy for the bulls and that sort of at this stage. However, what I am sort of looking at is this is a previous sort of outlook I've sort of had on Aussie at one stage. I was looking for this like sort of inverted head and shoulders. Obviously, didn't sort of play out there, but the thing that I do take away from this is these little moves that Aussie is known for doing, which is obviously, and also, look, it's not just Aussie, but you do see it just come up, clip all the highs over here, and then we ripped all the way back down. I mean, this is just insane, that move. Like, I'm still a bit shell shocked by, I was shorting from the top up here, from shorting from 69, and I sort of flipped probably like very early, but like flipped around this time, and I've been trying to catch it, then sort of little shorts, and then trying to catch it, and yeah, look, all in all, been a bit of a shit show with it all. But anyway, beside the point of that, what we are seeing, how Aussie likes to do these things, nice support, fakes it, and then rips up. Supports, fakes it. This is on a weekly, as I said. A couple of weeks down underneath here, little one just down the bottom, clip out everybody, then move back up. Look, this is FX. This is what people do. We can even sort of see that little spike down before that big reversal last year. This was where was it, August. I remember this because this was the first day I was back from Europe. Takes out the lows, clips it out, and then reverses all the way back up. So look, we are in that kind of position here. We've taken out obviously multiple lows. We took out the August lows. We took out was this the October 23 lows, and even sort of is this October 22 lows. So we're actually pushing back around levels not seen since 2020. And I actually also noticed this. We're right down at this is like GFC levels. I was pointing this out to my partner yesterday that sort of this just sort of goes to show like this is the sell down GFC, a bit of a history lesson I know, but that's GFC, which hard to believe Aussie was actually sort of up um, around parity almost with US dollar there. But I suppose that's a testament to the whole sort of fact of everybody thinks that everything's beautiful and the world's in, pumping along, risk on, left, right, and centre, and then obviously bang, bubble burst and bang, came down. That's 40% it lost there, so that's pretty hectic. But anyway, regardless of that, the point is, yeah, we're at pretty sort of significant sort of lows. The sell down's been ridiculous. I think I said over the weekend it's 14 out of 15 weeks or so. I think we've had a sell down. So look, it's not really sort of a cause for hey reversals are starting as of yet. But look, it is. It's got to start somewhere. So and this is a reasonable idea that it has actually just clipped and taken out these lows. Anybody that tried to have their stops under here, stops under here, stops under here, they're all gone. Well, textbook styles, well, ones anyway. Drag in a few more shorts, particularly with that NFP print over the weekend, but we are seeing a little bit of a push up here to sort of kick off the week anyway. We'll see how this goes because obviously, look, it is a very strong downtrend. There's more chance that it continues than you've picked the very bottom. So anyway, look, if we get down onto a lower time frame, actually did have a little bit of a breakout, as you can see, sort of coming through here last night. Let's put it onto a bit of a I think. We can see the sort of obviously this little sort of channel sell down through here from it was this when but got back up almost to 63 last week. Came down, a little bit of a break, and that was a nice little sort of technical kind of correction coming out through here. With these channels, not that it was a perfect sort of channel, but these are the early indicators that you are going to get a reversal through these channels where it fails to sort of continue where that channel should have been. Obviously, sort of coming down here. Like, I mean, it came down very strong through this period here. Obviously, this is NFP last Friday. If we were to see this sort of then continue coming down, that's where you would have been looking, around that 61 level. I've seen a lot of articles where people are going, oh, Aussie going down to sort of 20-year lows and, you know, it's going down to sort of like sub 60. I can't remember, some cutesy sort of title of like, there is chatter about sub 60, which is just garbage, really. But, sorry, just bear with me one sec. I've just got an announcement coming out. All right. So many announcements coming. I don't do a lot of ASX sort of stuff, but I do have a couple of bits and pieces. And we've got some mining licenses being granted on one of these companies. Anyway, we're here for the FX and that. So look, where was that? Where we are, sort of with the Aussie. So look, a little bit of a reprieve. We've got a technical break through this level here. Honestly, I think it's more so a case of a weak US dollar. As I said over the weekend, it was sort of coming into that negative divergence on the daily, and it sort of gave it a little bit of a push up in that sort of through last night, which I'll get onto DXY in a moment. Obviously, Aussie not being part of DXY, but DXY being the sort of broad US dollar buying or strength indicator across the market. And when we see that get sold off against the majors, we're going to most of the time see a little bit of that sold off against the Aussie. Everything's been bashed. I mean, the pounds at like, I think I said I think I saw 14-year lows. Euro's almost back down to parity again. Um, Japan, I saw the yen was strengthening up a little bit. So this, is something that does take a little bit of a whack against the against DXY as well. But anyway, we saw DXY kind of sell off a little bit, particularly through US sessions last night. I'm just having a quick look at what time that came through. It's actually early morning. So sorry, excuse me. Um, Yeah, I think this is probably more of a US dollar sell-off opposed to, hey, everybody's just realized that Aussie's a great buy kind of thing. So, look, it was a nice little move. I caught part of it. I got off a little bit early, actually about an hour before it actually got that last little spike up there. But, that's the thing, taking off little shreds along the way. I think this will be an interesting area if we can get back above 62. Obviously, it's a round number. It poked its head up there previously, sorry, like about an hour or so ago, but you can see if there were to be like a little bit of a thing through here, you can see that there was a little bit of a sort of resistance that was putting in on the way down through here. I mean, with these choppy sort of things, there's quite a few of these little levels through here, so let's just call them some zones. Actually, what we will do is get onto the other Aussie chart. That's more my broad Aussie chart. So this is the Aussie chart that we're using for the short term. But as you can see, it's kind of testing the underside, really, of this support zone that I think this has been holding, yeah, pretty much right through that sort of Christmas holiday period. I think we had that 25 base point cut, which was for the US here. And this is what I was referencing on the weekend as well, that, your textbook reaction should be with a cut that the currency will depreciate. Obviously, US dollar at this period here strengthened even with a 25 base point cut, and also it was a 25 base point expectation. So it wasn't like, oh, but everyone was pricing for something different. So it just goes to show that sort of like, should the cuts come with Aussie, there is a chance, or based on sort of other things, like as I said, the BOC did the same, RBNZ did the same, that it could actually strengthen off the back of a cut should those things come. I'm still in the camp that I don't think we'll see cuts till mid-year, but we got a bit of data out this week. We got employment data for the Aussie on Thursday, and I think that's going to be something that's really going to sort of start to factor in as to sort of whether we're going to be getting those cuts earlier or later through the year. But look, as it is at the moment, there's a bit of a broader sense. We are sort of retesting this underside of this support. You can see pretty much if we drag this all the way through here and call that just a straight zone, you can see 62 is quite vital here. So here we go. We've got, where's that little arrow gone? Supports here. Supports here. Chopped and changed around here, but that strong 62 number, and as I said a moment ago, that was your most recent sort of resistance. So it's no sort of shocker that it did come to a bit of a halt through this area here. We'll wait to sort of see what happens. We've got obviously US CPI coming out tonight. That could be a factor. You may sort of see things sort of quieten up a little bit prior to that. But I think above 62, then we're starting to sort of go, okay, well, like I said before, the indication of a break of a channel, a reversal of a channel, is a failure to have the sort of continuation. So this really should have been coming down, 60, probably sub 61. Should this be a continuation down here? Because you go bottom, top, bottom, top. It hasn't touched the bottom down here, and buyers have actually sort of stepped in this scene a little bit earlier to push it back up here. So 62, that's our immediate sort of target to get above. Falling resistance, which we can see has been super strong and actually respected since the October highs of 69. So, you get above these ones here, then you've got your, obviously your swing highs, 63 being the next sort of main sort of handle there. And then you start to go, okay, hold on, wait, maybe we're going to see a little bit more of a sustained recovery move with with the Aussie dollar. So look, it's got to start somewhere. It's pushing up a bit here now. We just really got to see what's going to be happening with the US. We've got the inauguration coming up in less than a week now as well. So that's another thing that could be playing on it. There's a couple little sort of headlines about Hamas and all this kind of stuff and ceasefires with Israel and this kind of stuff as well. I don't think the markets really cares so much about this stuff anymore. I think they kind of moved on from that whole sort of thing. But, again, people like the idea, or at least Aussie likes the idea of peace and things moving like a little bit more stably forward. Like I don't think Trump's necessarily known for being stable, but at the same time he does bring stability to these other areas which are a little bit sort of rocky. So there are a couple of little things to look for. But short here and now, above 62, we could see a little bit of a continuation. I'd probably be looking up. I think it seems like a pretty decent little zone through here. Across it, I think this will be decent for us all. So, about sort of 20, sorry, 20, what am I saying? 62, 62.35. So above 62, look for 62.35. You got a little zone around 62.20. 20 seem to be a level that sort of pop up with Aussie a little bit as well. But I'd say, yeah, there's probably a decent little sort of move up through there. Should we sort of take out this wick high on 62? It's a little bit overbought on the 1 hour. 4 hours got room to move though, so let's just sort of see what happens when US dollar sort of comes online. Speaking of which, so we've got DXY coming in here now. As I said, look, I mean it's still way way up the top. It did come back and sort of hit that sort of breakout zone that we had sort of through those previous highs. But as I said, if we get onto the daily, this is the negative divergence that we've been seeing through this last push up here with the little wedge, and obviously it attempted to sort of poke its nose out there for a second, but obviously as we saw, finished the day on a slightly sort of bearish push back down. So it's coming into these lower zones. Where we are here. Look, I think sort of, you're bound to find some sort of support here because these are the things, people trying to short these things here, push through, they're happy to get out. That's a little bit of buying. Hold it up here. Break through this one here, then I think it's a pretty clear-cut zone down at 108.96. That's sort of there and change. That's really the one I'd want to see break. If we see that break, then I'm targeting 107.60. These are the kind of things that sort of, if we see these levels break, these are the ones that are going to correspond with Aussie and probably metals doing a little bit better as well, which I'll get onto in a moment. But they're the levels that I'm kind of looking at. Sort of take out that wick with the sort of sell back down here. This is on the 4 hour. It does look like it's got a little bit of room to move. Should have sort of pushed through here. So let's put an alert just under this one. Yeah, so I'd say that'd give you a little move down here. And what you will see with these kind of things, and this is how the charts sort of will correspond, and it's what I call sort of like cross chart confluence kind of thing, that, speaking with Aussie as well, you would see this wick be taken out. You're going to find buyers at this level. As to how high the big bounce comes or whatever, yada yada, you got to play that as you see it. These are just your confirmation levels. However, if you see this wick taken out here, this will be the same time that 62 gets taken out on Aussie. This isn't a massive move down to your next support line, but it wasn't a massive move up to our next price target, which was 62.30 on the Aussie. So you'll see this come down into its supports. Aussie will come down to 62.30s. Then you'll see the push up here. You'll see the sellers flip back out of here, and they'll flip back into selling the Aussie as well. So these things will sort of correspond at the same time. So once you see, one or two of them line up, the confidence in that actual trade, not the sort of big buy the bottom and ride it all the way to the top kind of thing. We're talking short intraday trades. That's where you'll sort of be targeting for basically, that little bit of profit to get in and out of the trades. All right, still just checking on this little company. All right, so I think sort of pretty much, it does look like it's got a little bit more sort of pullback down here. The fact that it's got that negative divergence and also that wedge on the daily, if we get back onto this, I would say that's, look, that short-term target I think is definitely a possibility. I would expect some buying to come back in. Really, this is a pretty solid uptrend sort of like channel support. So, this is going to be quite strong to sort of get through. So I don't think this is just going to give up straight away. So again, this is another area where we might see a little bit of a reaction should it sort of come into contact with it. The RSI has tipped over here, but again, look, we did see the same similar thing around this point here, which was 2 Fridays ago. It had just crossed over, tipped up, and then obviously next wave down. So I would say that we could probably see this sort of roll over should this come down and test these lower levels here. So see this roll over and sort of push back down here a little bit more. But the main thing you want to sort of see for this is to see this channel break. And again, like I said, that'll be probably around the same time. If Aussie's going to break out of its channel, you're going to see a break of this channel. They're going to be coming sort of in line with each other. All right, move along. We've got gold. Gold started off okay. I mean, look, it's coming and testing out the sort of top side of this triangle. And it was going there for a little bit. It was holding, but boom, and it obviously sort of smacked on the nose. So really, it's just come back down to the horizontal previous sort of resistance and that for a support test. It is looking a little bit hot on the RSI here. We're on the daily with this view. Should this sort of make it back up here, I think this will be your breakout sort of line here. So obviously sort of like, back test, bang, high after a retest, that'll be your move here. But as it is at the moment, it does look like it's, it is a little bit sort of in question as to whether it wants to actually move back up. I think, indicators here are going to be sort of, obviously overnight lows at 26.56. If that does happen, I'd be looking down at 26.35 or possibly even a test of this rising support down here. But I think topside moves with the momentum, I feel it probably could actually sort of like push out the top side here above. Look, it was really, call it 27. You could chop and change a couple of bucks either side of it all, but really 27 main handle. It's a big round number. People are going to be paying close attention to that. I think that's going to be your sort of breakout level, and then we're going to be seeing a test of 27.20, really, to sort of see what happens with the market there. But it was looking good for a second. This is on the daily here, so if we get down onto a lower time frame, you can see it was attempting it, back test, and then whatever time this was, 9 o'clock last night, that 4-hour candle, just it gave way and came back down and took out, that was the wick lows from NFP. So you can see that obviously bang, it's taken out those lows, clipped out anybody that got in and bought that bounce and put their stops to even or whatever they want to do. But look, that was your, obviously you can see resistance, 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 and it's just turned into support just here as well. So bang, 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 support, support, and again, played support. So look, it's opened up a little bit. This is where we're on 4-hour here. A decent little start to it all. I think sort of above 74 should see a continuation move back up to the top side. So that's a bit of an early indicator. Main thing obviously is to get above, as I said, 26.97, but to call it 2700 because that's the big number there. But certainly at the moment, it's in back test territory. It's clipped out those wick lows. I think it's oversold on the 4-hour. I think above 20, sorry, 26.74, I think should see a little bit more of a continuation. We at least back up into the 90s there. So just having a look on a shorter thing. So yeah, there's quite a few wicks on a lower time frame around this zone as well. So yeah, I think we've probably got a little bit of reprieve coming here. Look, flip across, we got silver. Silver, same sort of thing, was doing okay, and then just poof, just absolutely melted down there. So of all the charts, as I said, I cleared all my charts out. Did I clear the other? Yeah, so I cleared all the other ones. I didn't clear that one of the what's it called? Silver. So the back test down here has come a little bit deeper. This is what I was saying over the weekend though. If you look at these daily candles, all these top wicks, they don't instill a great deal of confidence for continuation because it just means every time it pumps up, sellers are there, pumps up, sellers are there, and it's come down, and then obviously, yeah, it got smacked on the nose. So I think sort of look, if this fails underneath, say 29.50, 29.40 with those other wicks just previously back, I think you're probably looking back down at 28.86. That sort of lower test of this area here. But I wouldn't be surprised. So bear with me one sec. Let's just come online. All right. Yeah, so we'll have to sort of see what happens when DXY sort of comes online as to sort of what they're doing here. I mean, the channel is forming quite well. I thought maybe we get this double bottom measured move, pushing up through till above sort of 31, maybe looking like it's going to be a little bit more of a stretch. I think we're going to have to sort of see DXY take out those lower levels. But as I said, I do think DXY is going to get a little bit more of a sell down. We got CPI coming out tonight, so the market could be a little bit quiet through the day. But if we do get that sort of US dollar sell down, I'm expecting that to actually sort of pump metals a little bit through there. Despite the fact that they're actually still running pretty much in line with the US dollar. Obviously, we saw US dollar sell off overnight, metals sold off overnight as well. But you know, the normal sort of relationship between the two would be that you know, metals would probably get a little bit more of a pump on US dollar sort of selling down. So we'll see how we sort of go through with that. Copper, I think, is the one that is actually performing a little bit better. So we're really coming up to the top side of this falling resistance here, and it's butting its head. So the market is obviously looking at this line. We've had 1, 2, 3 touches up around this zone here. I think a breakout of here could be quite sort of bullish for copper as a whole, because as we've seen previously, of course I wiped all my charts. As we've seen previously with these sort of things, this was a big breakout that we had. This is one that we traded last year, just sort of coming into March before that big pump up to the top side here. These big sort of long consolidation periods, let's get rid of that one, can really sort of lead to quite explosive moves thereafter. Doesn't mean it's necessarily going to see a reaction this big that quickly. And also, there's a little bit left of this triangle should it sort of decide to sort of sell down, you know, just dribble along a little bit more. However, if we do get a big breakthrough here, that is, despite a little bit of back and forth and that before it moves, I think this is the kind of thing that we could potentially be looking to sort of be coming through second part of the year, at least. So, you know, again, this was a fair bit of a stuff around. There's a little time thing here. So this was before you actually got that break. That was 105 days from the actual break of the falling resistance. This is on a daily. So, you know, that's, as I said, and that's why I was saying second half of the year. So even if it does get the breakout here, it doesn't mean I don't think we're going to the moon, kind of, so to speak, straight away. But I do think that sort of potentially, should we see the breakthrough here, that is the time to sort of be buying dips for a potential move back up to at least sort of, you know, the high fours, I would say at least. That's broader view. Doesn't really sort of help so much with what we're doing today. What we're doing today, though, would be, as you can see, you know, this is where it's finding its little lots of resistance. So we know, as I said 2 seconds ago, we're looking at the higher time frame chart. This is your more short term, where the sellers are coming in, but you know that the falling resistance is coming right through this area here. So any sort of breaks through here may be a little bit limited for time, but should we sort of get through here, I think 447 is probably where you may see a little bit of a move to, which would come up through here, which then could provide with, obviously, as the falling resistance was like down through here or so, this could give you a bit of this kind of move, a break, a breakthrough here, and then back test to that breakout level. So I think sort of alert just above this to sort of see if we get some sort of continuation. All right. Cool. And finally, just finish off with China. Because, as I said, actually put a thing out yesterday on X and that because there was a lot of headlines coming out yesterday in regards to PBOC saying that they're going to do what they need to do to stabilize the currency. And I went over this briefly, but I think a lot of the market and a lot of what I've been reading about it is people referencing what China did last time Trump was in office. And I mentioned this over the weekend with it all, but last time China was on an absolute rip. They were, on this run from 2000 to 2016, high trajectory, high growth. People were talking about, potentially taking over the US and all this kind of stuff. And look, they were ripping and they were sort of on a run. And that's why they had such heavy-handed tactics taken against them to sort of slow their progress. That impact did what it needed to do. And I don't think China has forgotten that, and it's not necessarily they haven't forgotten it necessarily a bad way, but they're humbled by that. And basically, in short, last time they were on a rip. They had all these massive tariffs put against them. They let the yuan depreciate. I think it was about 13, 14, 15% or so, which is a massive, massive move. I think I covered it the other day, and as I said, that takes you up, depending where you're calling them, sort of depreciating it from, that takes you up to around 8, which is just insane, should they do that again. But my feeling is that they're not in the same position as they were in 2016. And a lot of the headlines you see with Xi saying he's happy to talk to Trump and they're happy to sort of work together to do these sort of things. So 1 second. I think they're sort of happy to play ball this time because they know they've been humbled. They know that the trade war is not good for anybody. And they know that, Trump has got the balls to actually go through with what he says he's going to do. So I think sort of like, should they sort of like really sort of try and fight it this time? I think it's just going to set them back even further. So how that relates to the market is basically if they're coming out with these headlines saying that they're going to do what they need to do to keep the market stable, to keep the currency stable, means that they're not going to allow it to run 10 or 12% weaker. They're not going to use that weakening of the yuan to combat the tariffs. If they're not going to do that, and they're not a threat, and they're happy to work with Trump, well, in theory, so 1 second. And in theory, that they're not going to be, it's not going to be required to have such strong tariffs against them because they're not as big a threat. They're happy to work with the sort of Trump administration and keep the trade open. I mean, end of the day, that's what you want. You want to see the trade still flowing. Like, yes, America wants to sort of try and bring back their manufacturing and yada yada and all this kind of stuff. But I think realistically, they just don't have it set up the same. It's nice to sort of think that, yeah, you're going to give, Joe Sixpack his jobs back. But you know what I mean? They don't have the factories, they don't have the infrastructure, they don't have all this sort of stuff set up. They don't have the industry set up to just automatically flip and just make it. It's not like we could make it in our backyard, but we decided to make it over there. You decide to make it over there and you have for so long because it's just cheaper. You know what I mean? So while they sort of say, we're going to sort of bring all the manufacturing back, US is I think the second largest manufacturer in the world anyway. But, obviously China, world's factory, yada yada, whatever it is. So I think the ideal thing is for them to sort of play ball, keep calm with, sort of what they may sort of do with the currency, and then if that is the case, tariffs won't go as hard. If the tariffs don't go as hard, you might see a little bit of confidence sort of come back into the yuan, and you may see these things strengthen. Obviously, that's a sort of bit more of a fundamental sort of overview. From a technical side, yeah, we're seeing this a nice little channel as a little target through here where we may see a downside move target. So let's put another little range through this zone here. And a break of this sort of sort of rising support, that could show a little bit of a sentiment shift. We are up into a very strong resistance area, as you can see. The amount of sell downs, I covered this over the weekend as well, sell downs from this area here, it's an incredibly vital area, and it's really pushing up the top over here. But I think a lot of that is fueled by the idea of people sort of going, oh, look what they did in 2016. They're going to do it again. But as I keep saying, I don't think they're in the same position. So I don't think you can apply the reactions of what happened in 2016 to this situation. We'll see. Should they break through here? Well, it's a different story. But again, the PBOC, they said they're happy to sort of try and stabilize the currency. They said they're trying to build their foreign reserves. So that means they've got weapons in their arsenal to actually step in and intervene should the market try to sort of push it higher. So we'll have to sort of wait and see. But certainly this sort of coming back down a little bit is going to be a big factor in Aussie sort of recovering a little bit, because I know it's been taking an absolute beating, obviously. Around the same time, end of September is when Aussie, I think, peaked around 69 cents. And as you can see on the chart right here, that was when the yuan started weakening. And through this period here, as you can see, through this period, yuan's sort of gone 5%. Which is a big move for the yuan. Like, as you can see, it's much more of a grind kind of sort of currency. So yeah, we'll have to sort of see how it goes. But this is line in the sand for the yuan at the moment. All right, so I think that's about it. A quick look at the gold silver ratio. I thought we may have sort of seen a little bit of a bear flag play out through here. Obviously, did not happen. So let's take these off the charts. And you can see it's holding this lower area through here. So potential, albeit a little bit scruffy, head and shoulders. So I'll still hold this alert down here to sort of say if it should have come back down here, I think this could be an idea that we could get the metals running a little bit higher. But as we are at the moment, it is sort of moving back up, potentially looking to retest those highs from start of the year. But at the same time, it is, as I said, same level as that sort of potential right shoulder. So should we see this start to move back down over here, this is the time that you're probably looking to sort of add to your metals for a potential head and shoulders move, which would give us a price target back down around 84.90. I mean, work to be done through there, but this is just sort of planning and preparing for it. All right, quick look over the news. We had a bit of Aussie data out sort of first thing this morning. It was a consumer sentiment over here. So no expectation sort of put into this one here, but as you can see from a negative 2% to negative 0.7%, it's not massive, but it's moving in the right direction. So that's a little bit of a positive. It was around the same time that Aussie got a little bit of a pump up here as well, and actually sort of pushed up in just above, put its nose above 62 cents. We'll have to sort of see. I think we got, where are we at now? Yeah, about half an hour or so, we got DXY sort of coming online, so we'll see what happens there. A little bit of yen data coming out, slightly stronger, not really something I pay too close attention to. And yeah, a bit of sort of China data. China seems to have been a lot more of this tentative data recently, opposed to having actual sort of set times and stuff. So typical, a little bit more of the BOJ when they sort of come out with their sort of rate decisions. That's always tentative. They never really seem to give an actual time. But the big one will be tonight, 12:30. We got PPI for US, and then tomorrow well, kind of Thursday morning, but tomorrow night kind of thing. CPI, that's a major one, but PPI looking to remain flat. So I think a bit of a shock either way of this. If this goes ticks up, we'll probably see a little bit of a strengthening of the US dollar. If we do see this sort of come down, then this could be something that sort of factors in. It's another tick in the column of potentially still sticking with some sort of rate cuts. A lot of the headlines I've seen at the moment seem to be more along the lines of reducing the amount of cuts through the year. So there were once upon a time sort of talking large, 4 or 5 cuts and yada yada, and the most recent headlines I've seen are 4 cuts now down to 2 cuts. So one in June and then one December or something like this, which is all very well, and I get that they're sort of time that they're pricing for this kind of stuff now. But come on, it's January 14th, and you're saying, oh yeah, cut in December. Yeah, I get that, but so much stuff is going to happen, not just can happen, is going to happen between now and then. The idea that you're saying, oh, they're only going to cut 2 times this year, well, yeah, let's see what happens. All right, that's it for me.